real quickly go over how I'm qualifying bases, where I'm putting my buy layers, and how I'm justifying my sell layers. So these are all great scanner tools. They highlight opportunities, but what's important is before you even use any of these scanner tools, you have to be able to qualify the bases. You have to know that. If you don't know that, it's not going to be something that you'll be able to profit from long term because there is a process to this particular strategy that if you leave out certain pieces, then it becomes a different strategy with a lower win rate. So it goes from a 99% win rate to, let's say, a 95 to a 90% win rate, and we're basically going to suction off the failure rate of the strategy because, as a matter of fact, it's a fantastic strategy. And the way that we're going to do this is we're just going to go step by step through the strategy using this tool, and we're going to qualify the bases. And then from there, we'll be able to accept alerts and be able to react to them properly and use the strategy. So, first rule is 2 months of price action, which pretty much on a 1 hour, if you scroll out, that's about 2 months right there. First thing we're going to do is take the paintbrush tool, just draw more or less either a letter V or a check mark, right? So this is kind of a check mark. We've got a check mark right here. This is the letter V. Here's the letter V. This is more or less the letter V. And then what we're going to do is we're going to keep those on. We're going to take this date and price range tool. I highly recommend favoriting it. It's going to put it in this little favorites bar that you can turn on and off with the star. But let's take this date and price range tool, and we're going to measure all of these bounces. We want it to look like a trampoline bounce, bottom to top. Okay, and we'll just real quickly go through these pairs. What can we say about these things? The average bounce is about 30%, give or take. That's so fantastic. Okay, so all I care about is the last one, right? So let's do the last one right here. Now, if you're having trouble with this, do it on the 4 hour. So much easier on the 4 hour, I guarantee you. You can't go wrong. And this will help you filter out noise. Noise is just you scratching your head wondering, is that the base? So underneath all of these are the real bases. These particular algorithms have to put bases under these. It's about 8% drop and a 6% bounce. You get a base put underneath price action. This is what the strategy calls for: 2 months of price action, and you want to see these nice big buyer reactions. A buyer reaction may not necessarily mean how much it dropped, so much as that sellers tried to push the price down and they were overwhelmed by buyers. That's the first step. Let's take this back down to a 1 hour. And, there's speculation, but this is stuff that I'm quoting from the originator of the strategy. And, there will probably be a lot of disagreement. But for the sake of this video, I'm just going to go over how I'm approaching this. And that is, I'm going based on this last one, right? 30%, I'm going to qualify that. That's where I'm going to put this particular base. Now, there's rules that can be broken, but what I care about right now is just showing you the same thing that I'm going to do over and over and over again so you can get a feel for how I'm looking at this and how I would want to trade this. So the first thing that's really important to do is learn this Alt plus H key command, keyboard shortcut. It's going to create a horizontal line. Watch this. We come back with the date and price range. Here's our base. We all agree that 30% is the average V-shaped bounce. It's a major bounce, not a minor bounce. A minor bounce would be something like this. See this? That's a minor bounce. That's 11%. 30% is the major base, and that's the one that's more likely to get respected. And I'm all about taking the safest of the safe trades. So let's take our date and price tool. We're going to come down. Remember our key command for PC, it's Alt H. For Mac, it's Option H. Come down to about 5%. That's where we're going to get an alert. 10%, that's actually second alert. That's getting ready. I'm buying 15, 20, 25, 30. Okay. So if you need these color coded, orange will be our alert. I'm actually going to use this as a cell layer, and I'll explain that in a second. But what I want you to pay close attention to is my 15, my 20, my 25%. Okay? Now, I'm not going to spend a lot of time labeling and coloring these, but what's important is that you have the mental idea of how I'm approaching this. And this is going to be cell 1. This one is going to be alert 5%. So if it comes down, if price comes down, right, and it crosses this line and it comes down to the alert and it's in a panic dive, and a panic dive is like, just imagine a plane nose diving. You know, a plane, if it pulls up, it's going to do that and then it's going to come down further. We don't want it to come down and then come up like this and come down. That's not a panic dive. Think of a plane that's trying to, that's more of a panic dive. So it crosses this first alert, it may come up like this, and then it comes down here, maybe it'll do the same thing, but ultimately we want it to come down here. If it comes down here, I'm going to sell it up here. Now, I could put $100 right here, $200 right there, $300, $400, it doesn't matter what you put right here, just so long as you've got a lot of size way down here. And so you may even put 50 bucks right here, 25 bucks. I mean, ideally for this particular strategy, if you have under 10K, you're going to want to do account building. That's a separate video for this. We're going to assume that you have more or less around or close to 10K in capital, or you're just wanting to get good at this first before you start doing account building. But there's plenty of resources on account building, and I'm not going to get into that right now. But let's just assume that you're putting like a couple hundred right here, put 200 right here. And you're going to put, let's say, you may put 200 more, you may put 400. And if it's 200 and 400, then you can put 800 or 1,000 or 3,000. By the time that you get to 30%, you want to be putting on some pretty decent size. Okay, think of it like you're at the supermarket or a Black Friday sale. This is only 5% off. That doesn't really get me excited. But if you saw a brand new MacBook Pro for 25% off, or let's say, a brand new Tesla car for 25% off, I mean, brand new, 25% off, you could just buy it and resell it and make a profit instantly. And that's the mentality. If you come into this game, expect 50% off, because it'll happen. I mean, let's look not that long ago. Let's do this. Let's take all these layers off and let's go back, because I think this is probably most important. And let's do, I guess we could do B&B. But let's go back to March and let's measure out, right, how much price was going up. And let's do 4 hour, because I really prefer doing this on a 4 hour. It's obvious to see what the V shapes are. So we've got a V shape right here, we've got a V shape right here. This is kind of a V shape. This is a check mark, and we've got a check mark right here, and this is kind of a V shape. See where we're going with this? Now look, this is news related, but I want you to understand the power of these, what I would consider thunder candles. Okay, so the average bounce is going to be about, 30%. And that's what we're looking for. So right here, before all this happens, here's 30%. Let's take these off. Now, somebody might say, well, this is the base. Okay, you know what? Fair enough. The sellers tried to come and push it down, but they were overwhelmed by buyers, right? 30%. Sure. We'll draw the base right here. We'll take our date and price tool, and we'll say 15%. Look, it came down 15%. It hit my layer, and then let me bring it back up to 10%. That's where I would have sold. And you can sell 90% and leave, your free coins in. However you want to layer out, you could layer out, dum, 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 dum. By the time you get to the base, you want to be more or less out of your investment, because anywhere in profit is good. I'm just choosing this as a safe number, not the de facto number. This isn't necessarily how everybody should be trading this. You may want to, instead of 15, maybe you'll do 13%. Instead of 20, you'll do 18. There's no one right way to do it. This is just kind of me giving you a standard way of going about doing this. But the point is you want to be prepared for that 50% off drop. So we can all agree that right here, this is where the real base is. Because look, it's already come back to this right here. So we'll say, okay, you know what? This base is now officially played out. And now, okay, it's not 30%. We've been getting 30% bases. See what I'm saying? That's the mentality that we need to be having is what is the average when you zoom out to like 2 months of price action? What's the average bounce? You want to look at the forest, not zoom in and look at the trees and have these minor bounces like this. You know, that's only 12%. Just the other day, I was doing 30% bounces. Why are we drawing bases on 12% bounces when we all know 30% is the average bounce? You know, it's a lot more likely this is going to respect a 30% base than a 12% base. So we come over here, we move this base down to here, right? And then guess what we're going to do? We're going to take this, we're going to bring this down, do the same thing we did. Look, because we don't know what's going to happen. So we do, you know, horizontal line at about 5%, 10%, you know, 15%, 20, 25, 30. I mean, you don't have to buy in 5% increments. You can buy in 10% increments. What matters is you understand how price reacts to price action. Now, this is something really important that that I've been employing, because if price comes down to this 10% and it comes up to this 5%, for me, I disqualify that. I genuinely am going to disqualify that out of my system, because what I want to see is I want to see it panic dive pretty quickly. And these are 4-hour candles that we're on. You know, let me turn off the volume really quick. This is you know, 5, 10. You know, it came down 10% and it bounced 5%. That's not what I want to see. That's not a panic dive in my definition. I would consider this cashing itself out. It's disqualifying itself. It's saying that was the bounce. This was the bounce. In fact, at this point, I could say now that this is the new base, right? And I would just say, hey, look, you know what? This is the new base. So I'm going to delete all these layers, and I'm not going to worry about them anymore. You see what I mean, this is honestly how I am going to look at this. Let me move this back. Let me bring this price action down, and we'll do the same game that we just played. 5%, 10%, 15%, 20, 25, 30. I mean, we would want, you know, I want to mitigate my risk. I mean, and look, let's say it came down right here, right? So here's 5, 10, 15. Well, I'm going to start buying 15, 20, 25. I mean, isn't that crazy? And this is news related, okay? But I'm still going to anticipate this in the back of my head, that price is capable of dropping, you know, getting that 75% off deal. You know, I think the base was like more or less, where was the base at? It was right here. How far did it go on sale? That's the question. It went 64% on sale. And so you need to know in the back of your head that it's capable of doing this. This particular pair went 64% on sale. And now we could even say, well, this was the new base, right? It went down to 10%, and went back up to the 5% below base layer. So it went about 58% on sale. Well, let's say that this was a bounce, right? Because look, it came down 15, 20, 25, 30, 35. Now at 35%, let's just say I was trading and this was the pair that I was trading on in this moment. Well, once it's crossed down, then my take profit gets moved down as well, because I'm getting more size. If I got, you know, 200 right here, and then I got, let's say 400, then I got 800 right here, and then let's say I got you know, 1,000, 2,000 right here, and let's say I got like 4,000. I mean, like, wow, I've got to be prepared to be able to provide that capital. And if you're going to do this strategy properly, you're going to want to be nibbling at 15%. You see what I'm saying? Maybe even take away the 15% and just do 20%, but 15% more or less, either 13%, 18%, it just depends on how whippy this particular pair is by measuring those shapes like we did. But this is really important. I would have been out. You see what I'm saying? If this would have come down and come back up, then I would have had it where my layers, as it came down that much, I would have sold like pretty much everything except for my free coins at about this bounce, because that's a big deal what just happened. Um, and so as it came down this far, I only have to sell it up to either right here at this layer. So if it came down and hit my 35% layer, then I can sell it right here at 16%, 17% for my last layer. And if I've got some pretty decent size, that's so much profit. Like, I'm so happy. And this was in 4 hours. And then 4 hours. So this is 8 hours to react to all of this. So that's why if it comes down to the 10, goes back up to the 5% layer, like it did earlier, the base was right here. It came down about, I think we drew the base right here. If it came down it hit my 10% layer, then comes up to my 5% layer, I'm like, oh, all right, you know what? New base right here. Even though it's still, a small base, it still hasn't respected this base. And what I would consider this is a breakout, and this is the confirmation. It's an impulse trade. This is people testing this support, which is now resistance. That's a whole nother conversation, but that would be what I would consider this. That's why I would say if it comes down to 10, comes back up to the 5% layer, I'm now scooting my layers down. That's not a panic dive. I want it to cross that line in the sand and come down in a panic. All the stop losses get triggered. And so that's why right here would be where I would grab this base. And I would then say right here. Because remember, these are 4-hour candles. So this wick would be unpacked. It would be not necessarily a wick. It would be actual candles right here. Right here would be more or less my base. Let's just treat it as a base. And so what we know is right here, we do the same thing. Look, let's just do this to see what happens. 5, because remember, we want to take the safest trades out of the safest trades, but at the same time make consistent profits and not just be sitting around looking at charts, wasting our time. We want to participate in this market. 30. Let's see how many layers it hit. This is our alert. This is our second alert, and this is our first line that we're going to be buying from. So just to differentiate. Oh my gosh. Oh my gosh. So, I mean, it I mean, and this is news-related price action. And if it hit that layer, I'm meh. And I remember, I mean, like, I remember all this happening. It was like, this move happened, and it was like, oh my gosh. And then it kind of did this bounce, but it wasn't like, going back up. Like, you'd think if it came down that hard, it would shoot back up. It just came down the second time. I'm looking at this, like, and the spread on these pairs was like 10, 20, 30% at, I mean, like, on BitMEX, it was like that. It was insane. I mean, the spread was just incredible. Like, just unlike anything I'd ever seen. It literally looked like the whole system was malfunctioning. Like, that they literally just shut off the machine. All the exchanges just turned off the machine. They didn't know what to do. And it was just people, like, as if like a bomb just got dropped on the exchanges, and people didn't want to buy, they didn't want to sell. They were just looking at it. This huge spread. I mean, it was mind-blowing. So in this case, if it came down all the way down to here and hit my 35% line, oh my gosh. And then look, it starts to come up. I'm ready to sell it. Like, 15%. Shoot, I'll get rid of almost everything that I just bought right there. That's 15% from my lowest layer. You see what I'm saying? It's important that the lower you go, the more that you buy. And then the more that you buy, the less price needs to come up before you can cash out most of your coins if you want to play it safe. You can leave some in and do the whole layering up game, but if we're here to take the safest of the safest trades, I want to get rid of a decent amount of my size, especially if it moves up fast. If it's a fast bounce after it's dropped, then that's a sign to get out. And that's not something that I came up with. This is something I'm kind of paraphrasing from the creator of the strategy. That if it starts to slowly move up, then it is more likely a situation where you would sell like a little bit and wait for it to keep going up and up and up and up. So these are situations where price just shot right back up. I want to get rid of it because I don't know what's gonna. It could do that same thing again, and I mean, now that you see what I mean by, you know, these big bounces, it'll help you feel a lot safer qualifying these 20% bounces. I mean, let's go into the present and qualify some of these on the 4 hour, right? This is the 4 hour. We want to do 2 months of price action. So here's kind of a V, here's a check mark, here's a check mark, here's a V, another V, here's a big V, V, check mark. Now we're going to do date and price range tool. You know, this is hopefully all starting to make sense. Look at this, 13%. We know what we're looking for. You can't see this and not realize that the 30% bounce is the average bounce for this pair. Because within 2 months of price action, it's very evident that 30% is the bounce. So in this case, what would we do? Well, let's take everything off, and we're going to do this. The most recent bounce, we see a lot of up and down. What is this one? That's 12%. Let's try and find where that 30%, 21 is there, 25. I would say this is actually really good because, look, I mean, this just happened last month. What do you think that that we're done doing these bounces? That from now on the bounces are going to be only 12%, 8%. No, you're being fooled into thinking that these are base cracks, and they're just not the average bounce within 2 months, right? Look, here's 2 months, August 31st to October 31st. 45% bounce, 30% bounce. Don't fall for this because here's what's going to happen. It's going to come down. I mean, that was a pretty good run up to be fair. That's fair. But I mean, it really started about right here. And if we're taking the safest of the safe trades, we want to draw the base at the very least right here. But let me ask you this. Where are all the stop losses set up? You know what I'm saying? This was the major move up, and then we had some take profit. I mean, like, I'm not going to get into like the specifics of Elliott wave, but the idea is let's see if I can get one of these. I think it would be like more of an ABC, but this is the idea. Bitcoin mostly, or cryptocurrency mostly moves in these three-legged moves. 1, 2, 3. 1, 2, 3. I mean, a lot of times it's a 1, 2, 3, 4, 5, but I'm mainly focusing on, look, 30%, 25%. If we were to not include the wicks, that's 35% move from here to here. Remember, this is 4-hour charts. I'm going to draw the base right here. Now, let's say you're impatient. You've been waiting this entire time for one of these bases to crack, and then it only cracked this tiny little crack. Don't be fooled by it. They want you to be fooled by it. Put in major size right here. Drive the price down 20, 30% off. You're going to panic out of your position. It's going to bounce right back up. The moment that you psychologically start to panic, this system is built for you. It's a casino game. And so I'm telling you right now, this is how more or less the casino game works if you look back 2 months, because this is the forest, metaphorically, and these are the trees. This is not This is to fool you. This is to make you think that it's safe to only buy a 3% base crack. Doesn't that feel really great knowing if you just have a little bit of patience? I was saying earlier that, look, if you want to consider this to be the base, right? 17%, okay, that's half. That's half of this. There's a good chance that it's going to drop at least this base, but probably this base. So one of these three bases is going to get cracked. Boom, boom, and boom. So there's stop losses right here. There's stop losses right here. Here's where all the stop losses are. They're all like this. Everybody's stop loss. They all were trading right here, expecting this to go up to here and go to the moon, right? And everybody put their stop losses right here. Look, this is really how people are trading this. They're saying, all right, well, here it came down. Oh, look, it came down. Now's my chance to buy it. Once it breaks past this point right here, I'm going to buy it right here. Here's a breakout. I'm going to put my support underneath right here. And then this is what they're doing. 2 to 1. So they're expecting this thing, right, to go how far? They want this thing to go 30%. This is really what's happening. Like this, you're peering into the casino game. And so this is the setup. They think it's going to go up, and it very well may be a fantastic setup. But here's what happens. All their stop losses, right, they're going to be under this. And some of them got kicked out right here. You know what I mean? They got kicked out, and people are like, oh, I'm going to buy because, it's underneath the structure, and I'm buying the dip, and, oh, I'm really smart, all this stuff. But guess what? All the stop losses are now under this. Oh, and then underneath this one, here's some more stop losses. Do you see how this works? Look, this is a whole booby trap system. And again, underneath here, there's a ton of stop losses. All the stop losses are underneath here. Now, right here, this is going to, let's delete all this. This is what we care about. Stop losses here, stop losses here, stop losses here, stop losses here. We want a 30% bounce. That's the big one. That's the one that everybody has been measuring. So this is the one that we want to put a base under right here. Okay. This is the one. And all of these stop losses are about to be like a domino effect. And hey, if it gets all the way down and triggers these stop losses, I want it. They're just giving their coins away. I mean, if this nosedives like a plane crashing, I want it. Please go lower. Not, please return to the base. Please bounce. Please go lower. Please go lower. That's the mentality here. Let's do same thing that we've been doing. We're going to take this base. We're going to do 5%. In this case, yeah, you could buy it 5%. You could buy it 10%. If you really think like, hey, we're crossing multiple bases here. You can't see my finger on the screen. Let me just put these lines in. Didn't mean for this video to be so long, but if you were sitting with me right now, this would be what we would really be going over, and we probably would be spending more than 30 minutes, getting you acquainted with this so that you don't get impatient, because you're going to be sitting around waiting for this, being like, come on, drop, and then it only drops 3%, and you're like, this thing is never going to drop. I'm trying to, they designed this system, any strategy is designed to make you feel like that you're not going to be making a lot of money. And that is when that giant thunder candle comes in, just like this. In fact, probably what happened with this giant thunder candle right here, look, how much did this drop? It dropped about 30%. And then, let's say everybody went short. Everybody went short right here. I bet so many people got wrecked trying to go short right there. Straight up, that's a thunder candle. You just got thunder candled in the face, 83%. Oh, you just, whichever way the market goes, that's the way that 90% were not anticipating. 90% of the market was anticipating down, and they just got flamed so hard because when you're looking at this, you're like, yeah, baby, time to short. 90% of everybody, if you didn't go short right here, you had plenty of opportunities. Look, it bounced up. You could go short right there. Remember these three-legged moves that we were talking about? 1, 2, 3. It's psychology. 1, 2, 3. Young man, go to your room. This is it. We see it move once, we don't react to it. We see it bounce up, we don't react to it. We see it drop again, then we react to it. 1, 2, 3. That's all you get. And then look, it just run. It just runs up so hard. It just makes you like giggle. And this is something that's really important. Is when I see a big bounce like this, I get excited because of the base that it created. So next time that you see price run up, be like, time to draw base. 30% run up. That's the creation of the base. Is that big 20, 30% run up. Look at this. 1, 2, 3. This is an extended 1, 2, 3. Long story. I mean, extended fifth wave, extended three wave, whatever you want to consider it. I mean, none of this stuff really actually, like, somebody could watch this right now and be like, you're doing it wrong. And it's like, I'm trading a different strategy. I'm not doing Elliott wave. I'm just showing you, like, when you see something like this and it goes up 86%, we're not here to count waves. We're here to buy people's stop losses and bad mistakes and panic drops. Like, that's what we're in the market of. It's the safe strategy. We're helping people out of bad positions. The more pain that people are feeling, the more reward that you get for helping these people. That's why you want to save your funds for these big thunder candles, and they will happen. You just have to be patient, and the way that you be patient is you just keep drawing these bases one after the other. You see exactly how we have this planned out. Look, this is 5% alert. This is actually sell 15%. That would be what I would use this for. If it came down to my 15%, buy 15%, then I would be selling. Comes down to 15% and it just comes back up, I'm going to sell it. Most of it right there. Buy 20%. I mean, this will be the last one that I'm going to do because, I mean, maybe I'll look at one more. Let's look at, Bitcoin, because that's probably one that just isn't really quite understood when it comes to base cracks. But we're going to do the exact same thing. So when it's coming down to 35%, if it doesn't bounce, something is going on. I mean, if it comes down there, come on. So like, if we're panic diving and we're not bouncing, yeah, baby, please go lower. Please go lower. Not, please bounce back up. Please return to the base. It's going to require balls of steel, but think about this. When price goes down real fast, somebody else is freaking out, just like you. Maybe you used to buy up here and you were the one that panic sold. They feel the same way that you probably did because they saw the big run up and they got excited. They bought right here and you were like, I got a base right here. Oh, now I get to move the base up because it tried to come down here. Okay, here's the new base. Oh, look, it came down here. All right, you know what? This is the base. Oh, it just kind of, okay, you know what? This is the base. Oh, look, it just ran up more. Good. Oh, and it came back down. Oh, it ran up some more. Oh, and it ran up, you know what? It ran up 27% from up here. This is my new base. I'm going to delete that now. This is my new base. This is where I'm going to start considering things 5% off, 10% off, but I'm going to sell 15%. And I think there's like a, like in between these two would be like sell 20%. I feel like, yeah, I've already done this. You can watch this again, but I think this is just needing to be like reinforced into your brains. Is like, I'm going to sell about 8.59% from right here. Okay, from the base, that would be about 12 to 13% underneath the base. And then from 25%, I'm going to be selling like about 11%. I'm going to be selling like 75, 80, 90%. You know, if you want to layer out, or if you want to hold your coins until it gets close to the base, that's fine. Build your own strategy with what feels comfortable. The only reason that I'm doing it this way is because I have a life and I don't have time to make a mistake to where I have to, what would be considered digging yourself out of a bad position, doing a break even, so on and so forth. You know, that's for people with time on their hands to trade. That's for people that enjoy doing trading, like for fun, the thrill of trading. My main thing here is I want to get in and get out safely. Get in and get out safely. And so that's why I'm saying, hey, if it comes down here, and then at 30, look, what is this? 13%. Then at this point, if I buy at 30%, then maybe I'll layer out, half at 25 and half at 20, right? So I could say this, like, buy 25, sell. Hopefully this isn't confusing. I'll do this in parentheses, like, you know, sell 30%, buy 20%, sell 30%. This is probably super confusing. And you know what? Buy 30%, sell 35%. That means if layers get triggered down here at 35%, I'm going to sell some of my 35%. Some of my profits will be sold right here. Some of my profits will be sold. Sell 35%. You know, that's how I'm going to more or less play this. Like just to give you a simple understanding of, again, these bases really aren't meant to be traded with size. Even if they're conservative, they have to put these bases on here because these are potential alerts. And I've messed with base creating algorithms myself, and it sounds like super complex, but actually it's not complex. What it's just saying is there's an 8% drop and a 6% bounce. Put a base down. It's only to make sure that no base is, not placed under the right layer. It's just an algorithm. It's just because there's so many different pairs that we just need a mathematical equation that can properly just put a line underneath price action, and this particular algorithm, conservative algorithm, is going to more or less pick an 8% drop and a 5 or 6% bounce. I don't know the exact number, but that's why these bases are created in this way. It's not to trade them. They're just to give you alerts. I mean, yeah, you can trade them with a mentality of not taking major size, and maybe there's a different strategy, but the main strategy that we're trading here is 2 months of price action, drawing V shapes, measuring those V shapes, getting the average for those V shapes, and then figuring out where we're going to buy when it comes down in price. Do we want to buy 5% off? Do we want to buy 10% off, 15% off, 20, 25% off, 30, 35% off? We want to see how this reacts. And then we'll have that information and be able to feel safe when we see price panic dive underneath that line in the sand and it comes down about 15, 20%, 25%. The further down it panic dives, the safer it is. In fact, you could just be buying at 20%, 25%, 30% off from the base, below the base. You could only take those trades, and that's fine. It's just that these really should be used as alerts if you're going to trade the strategy of V-shaped bounces when in 2 months of price action, measuring the average bounce, and then seeing how far it usually drops. Most pairs, let's take one last look at, let's take a look at Bitcoin, and let's do the same thing. We're on a 4-hour. Take my tool. All right, you know what? That's a check. Check. Remember, we're just going to measure these. We just want to measure the last 2 months. That's all we care about. Here we go. Oh, 22. Doesn't it seem like it would be more? It's because this is a very liquid pair. The volatility, this is being traded by a lot of bots and algorithms. Institutions are now apparently coming in. But one thing remains and one thing is certain, and that is, let's count that wick. Why not? One thing remains and one thing is certain. Look at this. Let's just count that. For Bitcoin, I'm gonna go back in time because I think that this is really important that we do extensive trading research on this particular pair. Oops. going to put on this pencil tool, draw tool, or whatever it's called. You see the information that we're getting from this? I mean, this is like, I wish I would have known this, let's just say. I wish I would have known this in the beginning, and it's okay. It's just, it wasn't provided this extensively how I'm going through this. And it's not that I want to be the one to provide this information. It's just that people are struggling, and I myself, you know, the effectiveness of the strategy is dependent upon the correct trade. Hold on, I did that wrong. Look. If you're trading the strategy wrong, then, I mean, remember this is a 4-hour chart. All right, here's what we can very easily discern right now. Let's take off the brush. For some reason it looks like bruh. Hey, bruh. Lots of brush tools. All right, cool. 46, 54, 28, 44, 19, 22, 18, 8, 6, 25, 13, 11, 8, 12, 8, 11, 22. I'm going to put the average at about 20%. 15. You know, 46, 54, 28, 44. The average is about 30, 35, 40. Now we've got 19, 22, 18. Now our average is about 30. Average is now about 25. Oh, look, 25% bounce. How perfect. 13. Okay, now we're still kind of, we're averaging out about 25, maybe 23. Oh, here's 12. Okay, now we're like at 20%. 19, 18. Okay, now we just had a 22. Let's just average out and say 22. All right, let me ask you a question. Which one? Right here or right here? Which one do you feel safer trading after we just went through this whole almost an hour of doing this? You want to take this one or do you want to take this one? That's all I'm saying. You know what? Sure, the odds of it returning to this base are less likely than this one, but you know what? What if this never cracks? The point is that this happens. You know what I'm saying? Like, look, let's come here to here, okay? 18%. Now, you could say, well, is this the base? Because it only went down 5%. And this is where I would make an exception and I would say, hey, you know what? That was a wick. I know this is the 4-hour, but that was a wick. Sure, we can move the base up to here, up to here. You know, we could move it wherever we want to move it. But the important thing is we're getting the average bounce. 11%. I'm not going to be getting major size, you know, underneath this, because the fact is, it's gone down like that. This was news related, but I'm just saying, it's done it before, it can do it again. Just be prepared, you know. Look, that's a 40% bounce. Let's say this one right here. 16%. Now, here's the real base right here. See this? I mean, look at that. 35%. Draw a base under this. And now, yeah, I know. Look, if you really want to scoop this thing up, well, let's scoot it up to here because, you know, it bounced from right here and then it bounced right here. The buyers are right here, you know, like this. Just we want to take the safest of the safest trades. And then look, 16%. So even if our base was right there, look, came down 17, right? So we would have started buying right here, and we would have sold right here. And look, I mean, how perfect. It came down, and then we got rid of it. Came down again. And you know, since it's underneath here, sure, I could, you know, I could consider continuing to buy lower, but I feel more comfortable. Now, I mean, yeah, it's underneath the base. So yeah, you could buy, you know, here, you could buy down here. You know, this March 2020 drop was news related. So to be fair, you know, how much profit are you really making? And this is one interpretation. But consider this: this is a very liquid pair. This is not like an altcoin where you've got these like incredibly volatile swings. Where back in the day, Bitcoin and Ethereum used to both do that. In fact, we'll round this out with Ethereum. Do the same thing. Remember, we're on a 4 hour, and clearly V check mark, V check mark, check mark, V, V, V. You know, we would be zoomed in like this. Check mark, check mark. Put the tool on. I mean, I can't tell you how valuable this has been. I'll consider that, you know, price tried to come down. It couldn't break through. It was overwhelmed by buyers. I'll consider that. That. Should I even consider that? That. I mean, this is like, you know, we're on 4 hour candles, so it would be more like that. And all of a sudden, we've taken something that, you know, seems like there's no volatility in Ethereum and Bitcoin anymore. Are you sure? Because its history has 56, 45, 46% bounce, 51% bounce, 18% bounce, 28% bounce, 14, 42, 33, 21, 29, 25, 18, 17, 14. It's consolidating, and it's tricking you into thinking that it's going to be like this forever. Guess what's going to happen? It's gonna get you comfortable with taking small profits, and then they're just gonna drop the price on you so hard. Let's do this last one. All right, so we know that the average bounce on Ethereum is more or less, again, 20%, 30%. So the minimum bounce that we want to take on this, let's see where these bases are at. Is it 3%? Now, I mean, keep in mind, the algorithm pushes the base down when it's under 3%, so the base probably started right there, and so that's why it has a base right there. So really the base was right here. It was a 6% bounce. We clearly know with this strategy, a 6% bounce will not qualify. And even, I mean, sure, let's take 16%, we'll draw a base, but let's play around with this idea and say, what is this one right here? What's this base? How much is that? 26? That's our number. Now, here's what we can do. What we can do is, okay, we'll start by layering with this first base because 16%, that's fair. There's probably a lot of stop losses underneath here that we can help out of these positions, but most of the stop losses are going to be, guarantee you, all the stop losses are like this. Guarantee you, guarantee you, guarantee you, it's going to be like this. Let's do, I bet most people probably all bought right here. In fact, let's just say, because I actually know that right here was a trade setup. This actually was a trade setup. And let's say there's probably going to be a lot of stop losses right here. And this is what they're anticipating is 20% bounce. So let's say they bought just right here. I mean, like that was just such a big move. I was waiting to buy it on a different strategy, so I can tell you firsthand that this would have been the look 2-to-1 with the stop loss below the local support. So that's one trade, right? Then here's another trade. Stop loss right here, and they're anticipating 40% bounce up to here. So these are the two trades that they have right now. Yeah, this one has probably got more stop losses under it realistically. There's probably going to be more support right here because honestly, there's a lot of belief in the crypto markets right now, especially with Ethereum. So if it gets down to here, that's going to be pretty impressive. But probably all the stop losses are right here, and then you've got more stop losses right here. So if it comes down to here, it's definitely, at least it'll bounce a little bit. If it just keeps going straight through like that, oh man, that'll be impressive. That would be awesome. It's doubtful, but remember, this is all about surprise. And I'll tell you this much: if it crosses this right here, that will be a surprise. See what I'm saying? Now, yeah, this is, from here to here, that's 24 days, right? 24 days, 26% is the highest high that it's seen in 25 days. So, if it comes down and it comes down through here, let's just say it breaks this base. This is what's actually going to be funny is these numbers are all going to coincide together. So again, we're going to take our tool, we're going to come down 3, 4, 5, Alt or Option H, 9, 10% off, 15% off, 20% off, 30. $35. And then we're going to put, that'll be our take profit, so that'll be red. And then about just under 18. And boom. This will be our alert. Alert 5%. This will be 10%. I mean, look. I would consider this, an alert, realistically, because if I'm going to tell a friend and they're going to trade exclusively Ethereum, I'm going to tell them, hey, I don't want you to lose money. I want you to profit. I want you to trade this professionally. Hold off until price gets past this 10%. And remember, we're going off of this base right here, 16%, not this base, which is, the move. This is the move that we've been measuring out and looking for. Are you trying to tell me that all of a sudden things have changed in the past 2 months? Like, this is a special case. We need to treat this differently. This happens every single time. I have been watching this price action. It does the same thing. I'm telling you, I have personally been burnt by these thunder candles, these panic dives. I mean, look at this. Oh, I mean, that's just devastation. It's total devastation when it happens, and people just can't believe it, and it's a surprise. What's to say? From here, what's to say? That's 35. That's right in line with our 25% line. Look, 25%. I mean, I can't talk you out of buying early and buying big because you think The price doesn't have the ability, test it. It's like being in the club and there's like some big dude and you're like, you're not that strong. It's like, you want to test Hulk Hogan? You want to test Arnold Schwarzenegger right now? Like, you want to test Shaq? Yeah, like Shaq's, not, it's not 1990 anymore, but I guarantee you, Shaq's a big dude. So all I'm saying is like, are you trying to tell me that Ethereum has been tamed all of a sudden, and it ain't like that, even though it just the other month just dropped 35%? No, I'm telling you right now, if you don't get it now, you're never going to get it, but you'll learn your lesson, just like everybody does. But this video is just, its only intention for this video to be created is to help you understand that these small bounces aren't meant to be traded with the original strategy. This is a different strategy if you're trading these small bounces and considering these bases to be the bases. Yeah, you might make some small profits here and there, but chances are you're not going to be ready when it goes down super far. And all of that months of work will be flushed down the toilet. So look, if you're watching this video right now and you see Ethereum, hey, it could keep going up, which in that case, we'd move all this stuff up. But as far as we're concerned, the buyers were in the market right here. Right here. Don't take this trade. Don't take this trade. Look at it. Look. Look at that. How much is that? That's a 36% move down. What I'm telling you right now is at least wait until 15% off from this base. That's only 16%. Let's go down to the 1 hour. It looks so much bigger. It looks so much bigger when you're looking at it on the 1 hour, but these are the trees, and you need to zoom out to see the forest. Because most people are trading like this. And they do this on purpose. They have to make money somehow. So, you can be part of the herd, or you can be part of that 10%. And the 10%, look, like this is what I'm saying is you have to grab this thing and do this. You know what I'm saying? Like, most people aren't looking back this far because they're on a 1 hour, because they're impatient. They're wanting quick money. They're wanting like quick success. And if you want the quickest success, then you zoom way out. And I mean, come on. This was news related, but I'm just telling you right now that this price went 65% on sale. And the first bounce, if we were to consider this, let's get rid of everything. We'll do the same game. What's the game? 4 hour chart. V. Sorry, we need to do that. I'm on logarithmic. V. How much is that? How much is that? How much is that? Don't even worry about how much it is. Just so I'm telling you right now, look. And then I gotta go after this. This is like saying the same thing over and over and over again. And it's fine, because sometimes you need to see the same thing over and over. Look, the base was right here, then it came down. Oh no, now the base is right here. Okay, now the base is right here. We just keep moving it up. Oh, 18%, you know what? That's the base is right here. Boom, came down, came back up. You know what? Now the base is, 20%. Okay, you know what? The base is right here. And look, this is what I'm saying right here. Do you see how it did a panic dive? How much did it go down? See how it came down 5%? And look, it came down about more or less, like, if we were to consider, let's get rid of this. Let's consider this the base. Okay? It goes down and then it does this. Okay, that's no longer a panic dive. It's not a panic dive. And look at this. Let's put our base down at 5%, 5%, 10%. Okay, If it goes down to 10% and then comes back up to 5%, I don't want it. I would call this the base now, right here on that wick. And look, may have even done the same exact thing. So in this case, let's follow it to the T. Let's delete that, and delete that. This is our new base. It's underneath this base. I mean, like, I just want to like provide some level of normalizing of something like this. So look, okay, so we know it's about to drop, right? We'll just keep it on here. So 9, 10, right? We're gonna start buying at 15, 20, 25. I mean, like, this is the max that it's probably gonna drop, like 4, 30. Oh my gosh. I mean, like, so close to, and you know what the irony is? Is like once it gets to 35% off, it's like, come on, it's got to bounce. 35%? Give me a break. That's so low. Even with news, I got to have it. I mean, like, Ethereum on sale for $123 when just the other day it was like, 250. I mean, like, look at this. Like, Ethereum 50% off. It was at 250, now it's at 125. 50% off. Ding 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 ding. Like come and get it. It's Black Friday, baby. Even if it's dropping like that, I don't care if it's I mean, if it's like March 2020 and it's dropping like due to news, that's on sale. And then look, let's just play that same game because look, it came down here, boom, boom, and it hit this. Look, boom, boom. How many percentages of this? Come on, 15% from 35%. Just get rid of it. Like, like yeah, you want to play that layering up game? You're in so much profit right now. Like you're 2 layers up, 15% from that layer. Just get rid of it. That's all I'm saying. Like if we're down that far and you want to take safe trades, it's profit on the table. Take the profit because guess what happens? Look, we're going to take off all of these. We're going to put the base right here. We're going to play that same game. Play the same game. And then I have got to go. 5, 10, 15, 20. I mean, who cares where they are? Just get some. It's on sale. 30, 35. Yeah, baby. Where did it go? Five, 10, 15. So look, you delete that. 5, 10. Look at this. Let's say you start out realistically. You got 200 right here. You've got, let's just shoot. Let's go big or go home, right? Let's go big or go home. 800, 2,000, 4,000. I mean, most people trading this strategy have way more money in this stuff than that. But this is just for somebody that, hey, if you're going to throw the farm at this thing, then that's what that's what you're looking at. So it's 15, 20, 25, 30. If it's right here and you're not selling it like right there, like I know, look, it came up and it respected its base, but like, okay, yeah, I mean, sure, you could say, well, it was underneath, this base right here. However you want to trade this, just get ready for these huge drops. They happen. You'll want to be prepared for them. They happen like in a cycle, and they're meant to happen this way because for them the money's on the table, and it works in the same way psychologically. Everybody's zoomed in, and we've got this big run up, and then look, run drop, run up, consolidation right here, consolidation, big run up, and then kablamo. And then look, they're trying to fool you. Look, we got another big run up. God, inching its way up right now. Soon it's gonna drop, and it may be, look, it may do this. Let's make this go. May come up to here and do this. And guess what's going to happen? You got your base. Now your base is right here because it's qualified itself as a big reaction. And it's going to do this. You know what I'm saying? And guess what you're going to be doing? You're going to be buying some around right here, right here, right here. Oh no, you only got this much hit. Well, guess what? We're going to draw the new base right here. We're going to delete you. Delete you. New journey. This is the new base because it's bounced up 27%. And then we delete this guy right here. And we say, and you know, again, in this case, okay, well, maybe, you know, hey, well, you know, it kept going further down and blah, blah, blah. Yeah, you want to buy it at 5% down here. You know, oh, well, it's, you know, it didn't go up all the way for this. Whatever the excuse is to get you to, you know, get more size in further down. For some reason, you feel like there's some reason for you to get more size. Take the size. It's just, I'm going to approach this from the safest approach, and I'm going to anticipate that it's going to drop this thunderous drop. But after 35%, it's got to bounce. That's all I'm saying. Just at the end of the day, when you look at this base, do you think that's a base?